What is going on, everybody? Jonathan Farrell with the Two Mortgage Guys here. I'm with Ladi Sanchez. Ladi does loans.
Hello. Are you on?
Are you on? Is this working?
It's working.
Yeah,
Hello.
there we go.
Is anyone out there?
Is anybody out there today, right? So anyway, basically what we want to talk about is new year. A lot of people are getting ready to file their tax returns, and this is an excellent time to give us a call so that way we can start getting you ready for a pre-approval.
Right.
We have multiple down payment assistance programs that are available, right? So like our new program that we're talking about, the GSFA Open Door program, that program can basically get you in, cover all down payment. We get the seller to cover closing costs. Now you can use your tax refund to just pay off debt to qualify for an even higher sales price, right?
Okay, can you say that slower so
Fine,
they can
I'll say it
really
slower.
understand it?
So-
Because that's a big deal, man. It really is. Yeah.
It's a big deal. Honestly, like this program is super solid. What it is it's a gift and also a silent second. And basically what it does is allow you to get into the home for 100% financing. And we've already, looking at the beginning of this year, we have I just had 4 put into contract that were all GSFA. Open Door program. We just closed 4 of them, another 4 of them. So, this is a program that we are definitely using to help people take advantage of it and get into homes.
And not a lot of people, just to let you guys know, not a lot of people have this program. Most brokers don't have it. If you
Most
go into
builders.
new builds, you're not gonna get this stuff. So, if you're interested in first time home buying,
Right.
we have it.
And not to mention, a lot of lenders don't like doing it because it doesn't pay well. So I'm going to
Ooh.
call a couple people because it doesn't pay well. So even for our real estate agents, that are out there, we have no problem doing this. This to us is
Real
another
talk.
way for us to get people into homes, regardless of, hey, we might not make the same amount on the back end of it. We are still willing to do that to help people who might not be able to get into a home
That need it.
get into a home. So we just had I had 2 agents just call me who were the listing agents, like, hey, so you guys do down payment assistance? My lender doesn't do down payment assistance. I'm like, well, he probably does, but he just doesn't want to do it because he's not going to get paid. So ultimately, like, for us, it's more about let's get people into the home rather than, okay, what am I going to take home on this deal?
Mhm.
So again, if you are out there, if
I do
you're
it
a
for
real
the
estate
reviews,
agent,
man. I do it for the reviews. That's
Yeah.
it, man.
my favorite review so far is the one that you just got. I love Lottie and his frosted tip. So,
Oh yeah, yeah, that happened.
It did happen, but it made my day. I don't know if it made Lottie's day, but ultimately, again, it's just another tool that we use to get people into a loan or
Right.
into a home, not
Right.
necessarily a loan.
Right.
But there's a couple of other really good programs that are out there, but that's one that we are really pushing. And we've seen people, and again, too, the crazy thing is you have a 600 FICO score,
Mhm.
you can qualify for the program.
Right.
Like,
Oh, you don't need a 640 and above or 660?
no,
Like, what's going on?
600 FICO
Like,
score.
oh, your debt to income ratio is wrong, and your lender told you can't qualify. Like, what are you talking about?
What are you talking about? No,
No, you don't need to be below 45% debt to income ratio.
Right.
Like, those are that's huge.
Yeah.
I'll
even say
someone
too,
just got pre-qualified, and their lender says, oh well, you didn't have the debt to income ratio to get down payment assistance.
exactly.
And it's like, well, that's because he's only using these
And no
programs.
income limit. Oh, you made too much money. You can't qualify for the CalHalfa program. Oh,
Exactly.
not a problem. Let's go with GSFA.
Mhm.
There's a lot of things about this program that's kind of like amplify the down payment assistance realm. Plus, it's a gift. Like the majority of it is a gift. So instead of CalHalfa, where you had to pay back the whole thing if you were to ever sell or refinance, this one you're only having to pay back 2% rather than 7%. So again, I think that it's an overall win for everybody
Right.
in that case.
Mhm.
So, but the one cool thing that I will say is because when I was qualifying people for CalHalfa, the hardest part about qualifying them was you don't have the FICO score requirement. Most
Right.
people it would be like, hey, and then CalHalfa raises their income limit, or I'm sorry, their FICO score requirement to 660. And now it's like, okay, all these people that I qualified that just barely made it to above 640, now I have to re-qualify them and get them a higher FICO score.
Oh, that's right.
Again.
660, yeah.
So now it's 660.
And then if you're at a 630 FICO, you might need $7,000 or $8,000 just to get it up to the 670 or
Exactly.
660 mark. So it's like, well, if you're gonna do that, might as well just do FHA. But now it's like there's a solution.
There's a solution for that. The other cool thing too is just like you said, like with that, I have people that are like, I have the money, but to pay this stuff down, but now I'm not gonna have money for a down payment, right? So
Mhm.
just like you said, somebody might be paying 6, 7, $8,000 just to get their score up. Well, now it's not like, hey, I need you to get your score up to get the program. You meet the 600 requirement, and we can keep that money to be used for, let's just say, taking less assistance to get a lower interest rate. Like, there's a lot of different cool things about that we've been able to partner up with.
Right.
So,
Well, I mean, even if you say, well, you know what, it's okay, guys, I got it. I have my 10 grand. I've been saving up. Like, I don't need this down payment. It's like, well, what about closing costs? You
yep,
know, it's the market's hot right now. I mean, just yesterday I was talking to an agent, 13 different offers on one house. It's
yep.
like, what? It's like, it's crazy.
And we're
So,
in January. That's unseen for January.
right. It's usually in the March area. Uh, and so it's like, use that's right there. That's the gift right there. You
Yep,
can be using for closing costs, you know? So it's a good strategy. So I just want to let you guys know if you when you're buying a house, you have to have a good equity position. So and a strategy going in. So so what's the best loan out there? Well, it's the one that best suits your needs, right?
absolutely.
And so, but in reality, strategically, you want to go at it. You want to look at it, and say, okay, I want to come in with this less money down. You don't need to put the 20%, the 10%, even the 5% down. Just come in as low as you can because guess what? I can't predict the future, but more than likely, a year from now, you're going to refinance anyhow. Like it's
Exactly.
just going to happen. Whether you get a bunch of mail at your house, or I'm going to call you, tell you that much. In 7 months from now, I'm going to be like, hey, it's
Right.
time to refinance because I want you to take out that PMI, right?
Yep.
I want you to have a lower rate. And the other thing too is that you know almost everything is strategic when you're buying a house because even if you feel like you didn't get the best interest rate because your friend got a 1.1, at a local credit union or whatever, I want you guys to know that when you buy a house as a purchase, let's just say you had two twins, right? One twin had 20% down, right? And the other one is buying a house, and this one is doing a refinance and they have 20% equity. The 20% refinance equity is going to have a lower rate.
Exactly.
They've already gotten
The
kind of the
home.
credit worthy, of a home, and their credit is probably going to be a little bit better. And not only that, but the bank's already seen that they've had a house for 8 months or a year or whatever that is, right? And so you're going to have a lower interest rate. They came to me both at the same time. You're going to have a little lower interest rate on the refinance and the purchase, right?
And the
So
other thing too is the fees. Fees
right.
for refinance are going to be way cheaper than a purchase.
But now you have that equity power, right? So it's like that's what I'm saying. It's like look at it as a strategic investment and say, you know what, I'm going to come in with this less money down, because in a year from now I'm going to have some equity, in theory,
Hmm.
especially here in South Riverside County. And once I have that equity, now you can use that same equity of the house to take out that PMI.
Yep.
Oh, Lottie, my house isn't going to grow. It's probably going to grow, 40, 50. Hey, that's 10% right there.
Hmm.
10%, you'll have enough money to go conventional with
Maybe even prepay.
it-
Am I?
exactly. That's what I'm trying to get alluding to. Now you can pay off your mortgage insurance and not have any mortgage insurance and have a lower rate.
Exactly. Yeah. I
Voila.
mean, and that's the to play off that. That to you is the difference between calling somebody like us and just going to the place that sends rockets into the air, right?
Yes, that place.
So that place over
Yeah.
there. Yeah, and the reason being is
Actually, you know
because
what? A lot of places, man. I mean, just
yeah, I mean call
dude,
center type people.
call your competitive advantages the way it is, man. I mean, you cannot go to many lenders out here, even in the valley, even some reputable ones, and get this type of information, this type of caring.
Yeah.
It's going to be difficult.
Yeah, and I mean to I've been in the industry for now 9 years. I know that you've been in this industry for a couple of years too. Like a lot of the stuff that we do is just come from experience,
Right.
and ultimately being able to help clients and be able to show them like, hey, look, why don't we instead of taking this route here, why don't we go ahead and look at maybe prepaying your MI, or why don't we go ahead and maybe you need like a little bit extra cash out, like let's put you into this program rather than this program because ultimately it's going to pay off a lot better. Like for us, even with like I have a refinance that I'm working on right now. She's not quite at that position where she can remove PMI, but what we're going to go ahead and do is pay off the MI up front.
Right.
It's going to save her $300 a month, and it's only going to cost maybe $4,500 to do that because
Mhm.
she's at a 15% equity position.
Mhm.
But in the next 15 payments, she's going to recoup that back. She's planning on
Right.
keeping the home for, I don't know, the next couple of years. So ultimately, that's going to pay off and have a much greater payoff than if I were to just be like, oh yeah, we're
Right.
just going to keep MI
Mhm.
on, and so ultimately, it's going to be a much bigger help for her. And I think that that's kind of the biggest thing. Like, if you are to talk to us versus somebody else isn't probably going to have that same type of experience to where
Also
they're going to
too, like,
say,
oh well, my lender, sends, 3, 4 different options to the client. It's like, first of all, that's confusing. I
right,
mean, the thing is, like, when I look at a loan, is like, I try to cut corners on my own personal stuff. I want to get the best deal for myself.
right,
Let's go buy a car together. Like, take me with you. But so with that same attitude, I look at my clients' files. Like, okay, how can if I was buying a house, if I was making this purchase, what would I do strategically? How can I do this the best way that was going to benefit me the most and my client, right? So
down
it's
payment
like, well,
assistance.
in this case, it'd be my client, right? So and that's kind of how and then I give them the two options, be like, hey, you look like you would like this one, but I would do this one, and this is why. Let's sit
Exactly.
down and let's talk about it, and show you the benefits of this
And the
program.
other thing too is not every deal is a cookie cutter deal. Most people are like, "Oh yeah, I'm going to slap you into this program," but
Mm.
ultimately that might not be what's best for the client.
Right.
So, when it comes down to it, who you speak with and what company they work for is going to dictate a lot of different things. You might have maybe a slightly higher rate in some cases, but ultimately when you take a look at the total payoff, it's going to be much more.
Mm.
So some things to consider there too. Not
It,
everything is
it's
not always about the rate. I can quote you a 3.375 FHA, but maybe a 3.65 conventional is a little bit better. So
I can get you 2.5 interest rate, just like your local bank is as well. If I,
right,
charge you
charge
three
you 5
points,
points.
it's like so I
I can
think
match that.
I
I
think I can match that.
think I can match that.
Let me see. Send me the picture of the fine print and
Right.
yeah.
So, anyway, guys, thank you so much for giving us a listen. I appreciate it. If you have any questions whatsoever, ask that you give us a call, and that way we can help you. We're going to flash the number on the screen for Lottie and myself. Whoever you like better, you can call. So, I'm just kidding. Call me. You're gonna call me. So, anyway, guys, thank you again and this is us wrapping up our episode.
Hey, if you
And
actually, I'll give you this one. You can speak the English. I can speak the Spanish.
there you go.
So,
All right, we'll
if
take that. We'll
you
take
guys
that.
have a Spanish speaking
We're
client,
gonna we're gonna do a
have them reach
Spanish
out to me.
podcast too.
Bienvenidos al radio. No, I'm joking.
¿Dónde está el baño?
Hey, that was good, man.
Right.
Yeah.
So anyway, thank you guys. Appreciate it. And talk to you soon. Bye.
Bye.